Fine, guys. So let's start today's session, guys. So in the previous session, we had been discussed various components, various concepts of accounting. So today, let's Satish, can you stop your shifts? Okay, fine. So in today's session, let's try to discuss about uh, what are the basic journal entries, how to record those in a systematic way, guys. Okay, so basic journal entries.
Yes, sir.
Okay, basic journal entries. See, in order to record the basic journal entries, four important things to be remembered. Four important parameters parameters to be considered while journalizing the transaction. So if you want to journalize any transaction, there are four important parameters which is mandate to be considered while journalizing the transactions, guys. Okay, so let's see what are those. Let's see what are those. So to identify, first important parameter is identify the aspects of accounts in the transaction. Okay, identify the aspects of accounts in the transaction. So before that, what are the basic transactions transactions? What are the basic transactions which will happen on the day-to-day basis? That is purchases, sales, receipts, payments, guys. Okay, so these are the basic transactions. So if you want to know the meaning of transaction is nothing but it is a activity where some sort of goods or some sort of goods is being exchanged. Okay, so if you want to understand the meaning of transaction is nothing but it is an activity that involves transaction is nothing but it is an event or activity that involves involves an exchange of value between two or more parties two or more parties two or more parties and it can be measured in money. So that is the meaning of transaction, guys. Okay, so in a day-to-day business, many transactions which will happen in the business, so we need to record all those transactions. Under that, purchases, sales, payments, journals, and taxes, guys. Okay, journals and taxes. So these are the various number of transactions which will happen in the day-to-day business. Okay, day-to-day business. So let's see each and every transaction how it has to be recorded. Okay, how it has to be recorded in the day-to-day business, guys. Okay, how it has to be recorded. 1 minute. Okay, fine. So to journalize any transaction, guys, to journalize the any transaction, either it might be purchases, sales, receipts, payments, we need to keep four important parameters in the mind. One important thing is identifying the aspects of a transaction. So second important thing is identify the aspects aspects and align. So once the aspects has been identified, align the aspects of accounts with golden rules of accounting, golden rules of account, and finalize finalize the debit and credit in the transaction. Debit in the debit and credit in the transaction. Okay. So once we identify the aspects of accounts, then important thing is we need to identify the golden rules of accounts and align with that golden rule. And the next important parameter is identify whether the transaction is a cash transaction or credit transaction. Identify whether the transaction is cash transaction or credit transaction. Okay, so we need to identify that. So once it is identify whether it is a compound entry or double entry or compound entry, guys. So these are the four important parameters which every journal entry has to be checked, guys. Okay, so while journalizing the transactions, we need to check four important parameters. Okay, so if you understand all the four parameters with step-by-step process, even a new particular role also can easily understand this. Okay, so even the people from commerce background, so even you learn, I request everyone to learn with the systematic way. So I know what is the journal entry for purchase and purchase entry, purchase to cash, but in many interviews they will ask for the explanations. So we need to be very understandable to give that explanations, guys. So that's the reason I will request to understand with the concept wise. That will help you to remember for a longer period. No need of by adding from yourself. Okay, fine. See, the first aspect I'm telling is identify the aspects of accounts in the transaction. So the first step I'm telling, if to analyze any transaction, what is the step, guys? Step one. So identify the aspects of accounts in the transaction. So we need to identify the aspects of accounts in the transaction. So what are the various aspects which will happen? So how many aspects in a transaction is? So for every transaction, how many aspects? For every transaction, there are two or more aspects. Two or more aspects. Few will be receiving aspects and few will be giving aspects. So the first important thing is we need to identify the transactions. So the first step of the accounting process is identifying the transactions. Once the transaction is identified, so in a day-to-day business, there are n number of purchases, sales, receipts, payments, taxations will taken place. Under that, we need to identify the first important thing is identify the aspects of accounts in the transaction. So for every transaction, there are two or more aspects. One is receiving and one more is giving aspect. Okay. So yesterday we discussed example per goods for cash, purchase of goods for cash, 10,000 rupees. So what is receiving and what is giving aspect is in this transaction? What
Goods
is receiving?
receive, cash
Purchase
payment.
and debit and cash is the receipt.
Sorry,
Purchase account
Goods
debtor to
receiving,
cash.
right?
purchases is the receiving aspect and giving aspect is
Yeah.
cash.
Yes.
Okay, giving aspect is cash. Okay. So, and one more scenario example amount amount received from customer ABC. Assume 1,000 rupees. So, what is receiving aspect and what is giving aspect is this is one transaction. The amount is received from ABC customer. What is the receiving aspect and what is giving aspect here?
Amount is
Cash is
receiving.
received.
Cash
Yeah, cash,
received.
cash we are receiving. That is a receiving aspect. And who is the giver here?
ABC.
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 Customer ABC.
Customer ABC.
Okay. So the next example, sale of goods for cash. Sale of goods for. So what is receiving aspect and what is giving aspect in this transaction, guys?
Cash
Cash.
Cash
sales.
receiving.
Sales
Yeah,
giving.
goods. Good. Giving aspect.
So cash is a receiving aspect, and what we are
Sale.
giving goods, that is sale. So like this, for every transaction, the first step is to identify the aspects in the transaction. Identify the aspects in the transaction. Okay. So the next example, see, purchase of goods for cash 10,000 and allowed discount by vendor 100 rupees. So how many aspects in this transaction is there?
Three
Three.
transactions.
Receiving aspects are 2 and one giving aspect. What is that?
Purchase of goods.
Purchase account data.
Goods.
Discount account data.
Goods
To
discount.
cash account, sir.
So purchases is receiving and what we are receiving
Discount.
here?
Discount.
Discount.
Okay. So in this transaction, how many aspects are there? How many accounts are involved in these? 3 accounts. One is
Three.
purchases, purchases, receiving, discount received. Okay. So like this, for every transaction, we need to identify the aspects in the transaction. What are the various aspects of transactions? Okay, fine. So once we identify the aspects, the next step is the step 2 to generalize the transaction. Align the aspects of accounts with golden rules of accounting. Golden rules of accounting. Okay. Yes, believe me, yesterday I given one interview for 9+ years experience. Okay. So even in that interview, they asked a question, what is golden rules of accounting, guys? Okay. It's a very basic and it's a very important thing. In entire world, no companies recording the transactions and no transaction in any company will be recorded without following these rules of accounting. Whatever the transaction size it might be, guys. Either it might be a small transaction or a very big transaction. Each and every transaction will be aligned with the rules of accounting. It is very, very important in the real time. Okay. So every transaction in the real time will be recorded only using these rules of accounting. Okay. So there are 3 golden rules of accounting, guys. Please allow me 1 minute. I'm getting on call. Okay. So there are 3 golden rules of accounting, guys, which will place a vital role in our entire career, guys. If you want to continue this your job in this particular domain, it will be very, very important to be learned, and it has to be kept for a long, kept in the mind for a longer period. Okay. So there are 3 golden rules of accounting. Once the aspects has been identified, we need to debit and credit. For every transaction, there is a debit and credit. So the debit and credit will be there. To generalize the debit and credit, to finalize the debit and credit, we need to follow some rules. That rules will be called as golden rules of accounting. Okay, golden rules of accounting. So what are those? So there are 3 golden rules of accounting, guys. How many rules of accounts we have? There are 3 golden rules of accounting. Okay. So personal account, real account, and nominal account. So what are the 3 golden rules of accounts we have, guys? personal account, real account, and nominal account. So personal account is nothing but it is, if it see any transaction with the name of the organizations or name of the entities, name of the vendors, name of the customers, capital accounts, drawings accounts, so all will falls under the personal accounts. Okay. So all will falls under the personal accounts. Okay. So in personal accounts, we have three types, guys. In personal accounts, we have three types. What are those? Natural,
Debit.
natural personal accounts. We have three types of personal accounts, guys. One is natural personal account. Natural personal account. Okay. So we have three types of personal accounts, guys. Okay. So natural personal accounts and artificial personal accounts, artificial personal accounts, personal accounts, and representative personal account, representative personal account. Okay, representative personal account. So for all these three, the rule is same, but understand what is artificial, what is natural, what is representative. So first is natural personal account, natural personal account. So under this, it is nothing but accounts of human beings. So natural is nothing but accounts of human beings. So natural is nothing but accounts of human being. So if any transaction which will happen, like example, purchase of goods from Ram, purchase of goods from Sham, purchase of goods from XYZ, purchase of goods from so and so person. So if any person is been involved, human being is been involved, those are called as natural personal accounts. Example, Ram, Sham, Ram account, Sham account. Okay, so customer account, all are natural personal accounts, guys. Okay, customers, suppliers, so all are natural personal accounts. Okay, so where natural personal accounts. So the rule is same: debit the receiver, credit the giver. For this also, rule is same: debit the receiver, credit the giver. So the next is next important thing is artificial personal account. Artificial personal account, guys. Artificial personal account. So artificial is nothing but, so example, non-human entities. Okay. So artificial personal account is nothing but non-human entities. So example, bank account. So if you see the name, that is uh, natural personal account. So artificial is nothing but accounts of non-human. So where human is not involved. Okay, non-human entities. Okay, okay, non-human entities. So example, your bank account is a personal account. Company account, company name XYZ Limited, Accenture Limited, Infosys Limited, Tech Mahindra Limited. So whatever it might be. Okay. So Infosys Limited. Okay. Accenture. Okay. So if you have Wipro, this all are the examples of, if any goods is being purchased from company. Okay. So insurance company. Okay. Or any government, all are personal accounts. So what is the artificial personal account, guys? Wherever the humans are not involved. Okay. So directly it will deals with the company. So those are called as artificial personal account. The last is representative personal account. The last one is representative personal account. What is a representative personal account, guys? So we have representative personal account, that is so where it represents a group of persons, a persons group of persons or amounts payable or receivable. So representative is nothing but the total amount payable or receivable. Example, your outstanding salary is a representative. So prepaid rent. Okay. So this all are the same, guys. Okay. This all are the outstanding representative personal accounts. So where amount has to be paid to group of persons or amount has to be received from group of people. So those are called as representative personal accounts. So whatever the account it might be, either artificial, representative, or whatever the account it might be, guys. So all the accounts will be fall and they will follow a single rule of accounting, that is debit the receiver, credit the giver. So what is the rule of personal account, guys? Debit the receiver, personal account rule. What is the rule? Personal account, debit the receiver, credit the giver. So example be given. See here, one example is purchase of goods from Sham. Is it Sham is a representative natural or artificial personal account, guys?
Natural.
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 So here one aspect of account is Sham. So we are using the personal account. So Sham is a personal account. So what is the rule we are applying? Debit the receiver, credit the giver. So Sham is giving, so we need to credit the Sham. Okay, understand, guys? Is clear? Okay. So when it comes to the next account, real account. So real account rule is debit what comes in, credit what goes out. Real account is mainly for the asset account, guys. Wherever we have assets like tangible and intangible. Tangible assets is nothing but the assets where we can see, where we can touch, where we can move. Example, land, building, equipment, furniture, office machineries, vehicles. These all are the assets where we can able to touch. Tangible is nothing but where the physical existence of an asset will be there. Physically, we can able to see those assets are called as tangible assets. Intangible, the assets which does not able to see. Example, there is one office which is located in the center of the town and that office has good reputation, like example, branded clothes. So why are we paying the more amount to the branded clothes? Because the brand we are paying the more money, goodwill, value of reputation of a company. Okay, value of reputation of a company. So based on the goodwill also an asset to the company. Okay, patent rights, copyrights. So goodwill can able to see, guys? Can able to see what is goodwill? How we can able to touch? No. But there is a value that is called as intangible assets. So either it might be a tangible or intangible. The rule is same. Debit what comes in, credit what goes out. That is about the real account, guys. Example here, purchase of goods for cash. Cash is an asset account. So cash is a real account for us. And the next account is nominal account. So nominal account is for all the expenses and losses. Okay. So all the expenses, if you see any transaction which is having the expenses, losses and gains, we need to apply a rule called as nominal account. So examples are rent expenses, electricity, office maintenance, security charges, admin expenses, travel expenses, salaries. Okay. So transportation charges, fuel expenses, all these are the examples of expenses which will happen. So if any transaction, you can see that there is an expenses, we need to apply a rule called as nominal account. So what is the rule of nominal account? Debit all expenses and losses, credit all incomes and gains. So these are the three important golden rules of accounting, guys. Okay. So personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. The example, we will take it one example. So purchase of goods for cash, 1,000. So here I told you to act first important step is step one. What we need to do, we need to identify the aspects. What are the two aspects are there? One is receiving aspect and giving aspect. So what is receiving aspect here? Purchases.
Good.
So purchases falls under which accounting rule? Purchase is an expenses to the company. If it is an expenses, which accounting rule it is applicable, guys?
Nominal.
Nominal
Nominal.
rule of accounting. So nominal rule says debit the expenses and credit the incomes. So we need to debit or we need to credit?
Debit.
Purchase the debit.
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 Okay. And what we are giving? Cash. Cash is a false under which accounting rule?
Real account.
Real account. So real account is debit what comes in, credit what goes
Credit.
out. So amount is going out. So we need to credit. Yes, understood? Yes, clear? So once after identifying the aspects of accounts, the next important parameter, step three is, what is the step three? Identify whether it is a cash transaction or credit transaction. Identify whether it is a cash transaction or credit transaction. Identify whether it is a cash transaction or credit transaction. So what are the types of transactions we have? Two types of transactions. How many types of transactions we have, guys? Two types of transactions. Two types of transactions in general. So what are those? First is, first type of transaction is cash
Cash.
transaction. So what is the meaning of cash transaction? Cash transaction and credit transaction. So cash transaction is nothing but the transaction where the transaction where immediate payment of immediate payment of cash is made once goods are delivered. Okay. So the transactions where immediate payment of cash is made once the goods are delivered. You went to shop, you buy something, you paid a cash. Okay. So where the immediate payment of cash is made once the goods are delivered. Example, purchase of goods for cash, sale of goods for cash, rent paid. So all are examples of cash transactions. So all are the examples of a cash transactions. The transactions where the immediate payment of cash is made once the goods are delivered, those transactions are called as cash transactions. The next step is credit transactions. Okay, credit transaction. So the transaction where the payment of the transaction where payment of cash is made in the future, but goods are delivered now. Delivered. So those are called as credit transaction. So you have a good relationship with the vendor or that particular shopkeeper. What you will tell, sir, I will pay you later. Kindly deliver the goods. Okay. So the goods are delivered. You're not paying the money. Okay. So those transactions are called as credit transactions. So example, purchase of goods on credit from XYZ Limited. XYZ Limited. So sale of goods for cash to ABC Limited. Okay, so here we are receiving the cash. No. So this type of transactions is called as credit transactions. Is understood? Is clear? Okay. So the next is we have the fourth important parameter to generalize a transaction is step 4. Once after identifying, then finally you need to identify whether it is a double entry or compound entry. Identify whether it is a double entry or compound entry. So there are two types of entries case, double entry or compound entry. Okay. So what is the meaning of double entry? The transaction which has only one debit and one credit. So what is the meaning of double entry case? The transaction which has only one debit and one credit in the transaction is called as double entry. The transaction which has only one debit and one credit. There is no any two debits and two credits. Okay. So as we discussed, purchase account debit to cash account. How many debits and how many credits are there? Only one debit and one credit. So such transactions are called as double entry. Compound entry is nothing but the transactions which has more than one debit and one credit. Such transactions are called as compound entries. Okay, the transaction which has more than one debit and one credit, such transactions are called as compound entries. So example, purchase account debit, purchase account debit to discount received account 100 to cash account. So how many accounts are involved in this particular transaction? There are two debits and one credit. So one debit and two credits. So this transaction has compound entry. So the transaction which has more than one debit and one credit, such transactions are called as compound entries. Is clear? Understand?
Yes, sir.
Is understand, guys? So the transaction which has more than one debit and one credit, such transactions are called as compound entries. The transaction which has only one debit and one credit, those transactions are called as double entries. Is clear? Okay. So these are the four step important things which has to be remembered for generalizing each and every transaction, guys. So now let's take with a simple example, then we will generalize the transaction. So rent paid by cash 10,000 rupees. So what are the two aspects of transaction in this particular example, guys? What are the two aspects? Rent.
Rent account to cash account.
So rent is falls under which rule of accounting?
Nominal account.
Nominal account. So nominal account rule says what it says.
Expenses and loss.
Expenses should be debited.
Debit
So
or
I need to
expenses.
debit or I need to credit here. I need to debit.
Debit.
Okay. So cash is a which type of account it is?
Real account.
Real account.
Real account. So what is the real account rule says? Debit what comes
Debit,
in? Credit
credit
what?
what goes out.
I'm crediting the cash. Okay. So what type of account? Is it a double entry or single entry? Sorry, double entry or compound entry? It is double entry. So do we have any? Is it a cash transaction or credit transaction? It's a
Cash
transaction. Cash transaction. So what is the journal entry for this? Rent
Rent
account.
account. Rent account to
To
cash
cash.
account.
cash account into
So if you understand each and every transaction like this going forward, Within a fraction of seconds, you can give the journal entry, guys. While learning, it will be like step-by-step process. But if you keep on habituating understanding in these 4 ways, that will help you to generalize in a very frequent manner. Okay, understand, guys?
Okay.
Yes. So let me put out some examples here. I'm expecting the accounts from your end. What type of account it is? So missionary falls under which rule of accounting, guys?
Real account.
Real account.
Real account. Cash,
Real account.
Real account.
drawings,
Personal account.
Personal
This
account.
is expense.
okay. So capital account,
Personal account.
Personal account.
personal account. So ABC Limited,
Personal account.
Personal.
what type of personal account it is? ABC Limited, which type of personal account it is? Artificial personal account. Okay,
Artificial.
artificial personal account. So, and goodwill,
Nominal account.
Real account.
Real account.
Real account.
patent rights,
Real account.
Real account.
real account. Okay, land,
Real account.
Real account.
Real account.
salary,
Nominal account.
Nominal account.
electricity charges,
Nominal
Nominal
account.
account.
Nominal account.
interest,
Nominal account.
Nominal account.
nominal account, rent,
Nominal account.
Nominal account.
nominal account,
Nominal account.
security charges,
Nominal
It is
account.
nominal account.
housekeeping,
Nominal.
keeping,
Nominal account.
housekeeping expenses. It's a nominal account. Okay. So like this, we need to identify the accounts, guys. Okay. So for better thing, what I will do is this. I will send out around 60 to 70 basic journal entry transactions. I request everyone to spend 1 hour of your time and understand each and every journal entry for a practice purpose. Record in one paper or in one document, paste that into the group, guys, so that we can get a confirmation who has did the practice. That will help you to understand the further coming sessions. If you not understand this, it's a waste of being to be part of this particular thing, guys. Okay, because very important in the real time we need to understand. If you have doubts, feel free to reach out to me. I will help you with that. Okay, don't be quiet. Very important to learn this particular journal entries, guys. Okay, I will send out at the last. I will mention here as a practice journal entries at the last of the document, guys. So kindly do the practice without fail from your end, guys. Let's understand.
Okay.
And we then we will continue the next session on the tomorrow, guys. Clear? Let's understand.
Yes.
I will send out within 2 to 3 minutes in a group, guys. Within a couple of time, I will send. Okay. So kindly do the practice without miss. Fine.
Okay.
Jagannath.
Okay, guys. Thank you.
Hmm.